Hello and welcome to a SOAR Financially Weekly Wrap-Up episode. My name is Kai Hoff and I'm your host of the SOAR Financially YouTube channel. I'm the @JR Mining guy over on X and of course also the CEO of the SOAR Financial Group. Really appreciate you joining us here on a Saturday, late afternoon, early evening in Germany. Good morning to our North American listeners and what is it? What time is it? It's probably after midnight. It's 2 a.m. in Sydney. So good day, good night, I don't know. Whatever you're up to. Thanks so much for joining us. Hope you can hear me okay. The comments are open. Please put any comment in there if there's anything I need to change technically. As you know, I'm a one-man show here and do rely on your feedback here. Much appreciate that. Well, first comments coming in. Hello there, Naturally Aspirated 88. There you go. Love it. There we go. Thanks so much. Have a few topics prepared for you. Gold is rallying. Gold has been rallying last week. 7th consecutive win for gold. Absolutely fantastic. Silver has been catching up to gold as well. The gold-silver ratio has dropped to 80.5 points. Doesn't sound like much, but looking at it, it is making moves. Silver is making moves here, and we're excited to see it because it has some catching up to do. While gold is chasing all-time highs, silver is still trying to break the $50 mark. So we'll take a look at that later, of course, as well. I have a few topics prepared. First, we'll take a look at the calendar in general. We've got the U.S. government shutdown we'll quickly need to talk about. Geopolitics, we need to look at the Gaza peace plan. Why do I mention these topics, by the way? Like, why do we look at the geopolitical situation? Why do we look at the government shutdown in the U.S.? Because we discuss the macro to understand the micro here on this channel. That means we try to understand what are the underlying trends that are influencing the gold price, that are influencing the miners. That's where we're coming from. That's our angle. And just want to make that clear. So really appreciate you joining us. Now, let's take a look at the calendar together. Let me bring that up on the screen here. We didn't get a lot of data this week, did we? We got a JOLTS job openings report. We got an ISM report and then manufacturing PMI and services PMI. That's pretty much it we got from the government side, but we got the ADP jobs report. I quickly want to show you that one because it's the only jobs report that we got, and might have to rely on that, or the Fed might even have to rely on private jobs data here by ADP. As you can see, the U.S. is not doing too well. It is losing jobs. 53,000 jobs lost 43,000 jobs lost. 32,000 jobs. Where did I get the 43 from? 32,000 jobs lost from an expected 50,000 jobs gained. Also, massive revision for the August number. As you can see, it used to be positive. Now it's negative 3,000. Underlying trends, employment, job market, of course, is weak. And this is the only jobs report we'll get until the next Fed meeting. Non-farm payrolls report was canceled. Maybe we'll get it late. We don't know. Government is shut down, meaning the Bureau of Labor Statistics is shut down. And we don't even have a new head of the Bureau of Labor Statistics, as you know. E.J. Antony was supposed to be appointed. President Trump pulled that nomination. We'll have to find out who the next candidate is. Apparently, Antony wasn't a suitable candidate that was agreeable for both sides of the aisle. Too much of a hardliner, apparently, and that nomination was pulled. So that's the only data we got that the Fed might even get until October 29th when it comes to jobs report. Why am I mentioning this? Government shutdown, I wanted to bring up a few graphics as well. Like, what does it mean, government shutdown? If this is day 4, I believe, that we're in right now. And before, I want to show you the DEUTSCHE real quick. Let me just get the graphic up here. I'm trying to figure out what is the impact of the government shutdown. And it doesn't seem like there is much of an impact just yet. The DEUTSCHE is just moving sideways. This is a 5-day chart here. Let's go to the monthly. As you can see, government shutdown, we're in day 4. So if you look at October 1st, you can probably see that on the graphic. The DEUTSCHE is moving sideways. It went up to 98, came back down to 97.7, so not too much. What has me surprised, as of Friday, the S&P 500 was trading at record levels. So the economy is shrugging off the the markets are shrugging off what is happening with the government shutdown. Maybe it's even a positive. We're hearing, discussions about maybe cutting jobs on the government side, using this as an opportunity. You got to word that very carefully because, of course, it's not an opportunity for the ones that are being affected here to downsize the government. We all know it's bloated, a lot of bureaucracy, especially in Washington. Is that an opportunity? Is it being used? Is it being politicized? Of course it is. The question is, what is the result? What will that do? DOGE is coming back up. That at least the term I've been hearing more over the last 72 hours, or 96 hours, than over the last 6 months almost. So we'll see where that leads, whether the government will come to a decision and to whether the two parties can actually make up their minds and come to an agreement of what should happen. Really, really important there. But the market so far is shrugging off the shutdown. Maybe I should have queued this up. Let me do this real quick. But I just want a quick look at the Fed. The SME group is always putting up the Fed watch, the forecast. Let me just share this here real quick. What is the market expecting in terms of rate cut probabilities? 96.2%, one cut, meaning 25 basis point cut. 3.8%, and this is trending up a little bit, actually. I look at this almost daily. 3.8% is much higher than it or much higher. I'm exaggerating, of course, a little bit, but 3.8%. It used to be zero. It used to be 99% rate cut, and actually, earlier this week, we've seen a percentage for a bigger cut, a 50 basis point cut on this chart as well. So keep that in mind. Depending on the economic data we're getting, and if we're getting any, that we might be looking at a jumbo cut again. If the employment market turns even more south, then that might be up on the table. The Fed governors, of course, presenting very different opinions. Stephen Murn still advocating for higher or more cuts, while I forgot her name. I think she was out of the Fed governor out of Washington. Williams, I believe, was advocating more, maybe to slow down the cuts here and take a more cautious approach. Market reacted to that, but other than that, not much to discuss at this point. We got, I think it's 25 days until the next Fed decision here. So we talked about the shutdown. We got to talk Gaza peace plan real quick. Macro-wise, geopolitically, really important because world peace, I keep jokingly saying, could have an impact on the gold price, of course. That's where we're coming from. That's what we're trying to understand. There's, of course, always an ethical debate, but we want world peace. Like, in general, everybody wants world peace. I want world peace. I think we're in 2025. We got the internet. We can figure stuff out. But apparently not everybody's smart enough to do so, and live and let live, right? So Gaza peace plan, I have a graphic up here that I used in a conversation with Alex Kreiner earlier this week. It just shows the 20-point plan. You can all make up your own mind what you think about those plans. There are, of course, some interesting points in there. I think that are unnegotiable is, of course, releasing of hostages. I think that is a given. Do it. Let's see where we go. Negotiate. That's, I think, what Hamas wants as well. I've just seen headlines that Hamas wants or is interested in sending back the hostages and is willing to negotiate. I think we're making progress here. We'll see where it leads, of course. The region is seemingly applauding the Hamas reaction to the 20-point proposal as well. Qatar, euphoric is the wrong term, but is supportive of this as well. So we'll see. Like, it's really important to make progress here. We've seen exactly we're 3 days away from the 2-year anniversary of the Hamas or the Gaza-Israel war here. And can we just end this? This is ridiculous, quite honestly. And we don't even need to touch on the humanitarian side. I think we all can agree that it's an absolute disaster, and we need to get this resolved. Okay? Let's do that. Let's do that, please. Just looking at the comments here. Hello, Born Hunting. Appreciate you joining us. D. Martin, thanks for the comment. Much appreciated. Of course, there's always interests, especially financial interests, when it comes to certain situations, especially war situations. And we don't even need to talk about the development plans for Gaza and building a Riviera out there in Palestine. We don't need to talk about that. It sounds ridiculous at this point, but somebody will need to rebuild Gaza because we've all seen the photos of the rubble. If we're going to turn this into the next Atlantic City, probably poor example that I've just chosen, but Trump was behind Atlantic City, and that didn't turn out too well, did it? So I'm not sure if that's something we want to achieve and aspire to. So we touched on government shutdown. We touched Gaza plan. Let's talk gold. Let's talk gold. Lots going on in the gold space. I have a few topics prepared from the gold side. Let's take a look at gold. There's a few things I want to bring up there. We got a World Gold Council report about the central bank buying. I think that's where we're going to start this conversation here on gold. Really interesting statistics. I love when they come out because nobody else really is producing those numbers as far as I'm aware. So always excited to look at it. Let me bring that up. Let me share this tab and bring it up on the screen here. And there we go. World Central Bank gold statistics. Those came out only yesterday. So fresh off the press. Following a pause in July, central banks are buying gold again, adding net 15 tons of global gold reserves. National Bank of Kazakhstan was actually the largest gold buyer this month, and Bulgaria joined the party. El Salvador, we're well aware, after buying Bitcoin, they're finally buying gold. They're buying real hard assets. Bit of a jab there. Just looking at the comments there again. Relax and enjoy. Much appreciate the comment. Thanks so much. Maybe we'll bring that up here real quick. Hey, Kai, what's the likelihood of Taiwan invasion by China while they still hold over $700 billion in U.S. treasuries? I think that is a non-topic at this point. I don't think China is really interested in doing that at this point. It might be a bit early. I don't see any aggression at this point. I'm not a geopolitical analyst. You might have to revert to the conversation I've had with Alex Kreiner earlier this week. And China is not aggressive. Like there might be even a vote that Taiwan will join China. That's absolutely legitimate. I don't see any military action that will force this. So maybe that's my answer to that question. Really appreciate you asking that. Keep your questions coming. I'll do my very best to answer them, or at least direct you in the right, or direct you to the right direction or the right place to find an answer to what we're discussing here. So not claiming all-consuming knowledge. This is an interesting chart because the central banks returned to buying back in August. We've seen more gross sales, of course, here in July. I really like this chart I want to show you real quick. And this is this one. I shared it on X earlier today as well, on my X chart at JR Mining Guy. Poland has been the biggest buyer of gold this year. They've publicly said we want to bring our reserve, the gold as part of our reserves to 20%. They've achieved that also as part of the gold price rising. And they've updated that target now to 30%. So they're active buyers. This is here. Target gold share within its international reserves from 20 to 30%. That is significant. And it's an interesting statement because we all know Poland is a next door neighbor to Russia and the Ukraine. So, of course, this has some symbolicism behind it as well. But they're getting it. There's some changes happening on the monetary side. We're still trying to figure out what is gold telling us, really. And that's a question I have discussed with Andy Schechtman earlier this week as well. We're at $38.50 gold, $48 is silver. What is it telling us? Like, what does that mean? Is it just hype like we've seen in other situations that is pushing gold and silver to these levels, or is there more to it? Are we really working towards a monetary change and a global monetary reset even, perhaps? And that's, I think, the number one question. What is gold telling us? It's not just the liquidity and the M2 money supply that is affecting gold prices, in my opinion, anymore. It feels like there's something more going on, and it's just bigger accounts right now. It's still like the institutionals are still the buyers. We've seen some ETF buying, which means retail is jumping at the bid here. But so far, it has mostly been, as you see, the central banks and other bigger institutions, Tether buying 1 or 2 tons every month as well, trying to back their stable coins with physical gold. Or farmland. They invested into Elemental Altus Royalties, which is now called Elemental Royalties after its merger with EMX. So they're coming into the mining game as well. Really interesting development, by the way. Just looking at my chart and notes here. So we talked about central bank buying, of course. I briefly brought the... let me check the chart monitor just on ETF buying. Global ETF, let me share this as well. Also from the World Gold Council, a little older because I think it's from September 29th, so it's earlier this week. The trends, so global ETF demand, you can see that here. You can see my mouse, correct? Yes, you can. Globally, of course, gold buying has gone down a little bit, the demand, but it's still positive. North America, Europe, Asia actually exceeding, which is interesting. We'll come to that in a second. It's actually exceeding last week's purchasing, which is an interesting development on the ETF side. And that's where I'm getting to now, is China is on holiday. There's Golden Week is happening in China. Everybody's traveling. And typically, trading is weaker. And what does that mean, trading is weaker? Well, usually the gold price doesn't see as much volume, doesn't see as much action, but it is. And I want to bring you to an interesting observation that... Lobo Tigre mate, but I've seen the same thing earlier. He was just the one to post about it. And I'm bringing up the gold chart here. Let me just switch to the gold chart real quick. Let's take a look here. So China went on holidays October 1st, which is roughly, this is the 30th October, right here. So 6:50 in the morning. So we actually seen positive price moves in the mornings. This is Asia buying. Let me see if I can circle this here. I'm getting better with my trading view account skills here, but this is Asia buying here. This is Asia buying in the morning. And then something happens. I'm not going to, can I use red here? Yeah, let's use red and let's make it a little thicker. But then something happens. Woof, woof. We've seen this here. And let me share Lobo's chart here as well. It seems like Mr. Slammy is back. And we keep joking, Mr. Slammy, but... and I'm starting to get the sense that Mr. Slammy is an early riser in London. He's not European. I think he's British because he keeps doing these moves. He keeps pushing gold lower, much lower. And this is the futures chart here. And we've seen the same thing. But the good thing is, very different this time, the market is buying the dip. And that is really impressive to see. Let me use green, actually, because green is a positive color. We've seen this again. We've seen this again. The market is buying the dips, and as you can tell... Oh, wait, let me share this. Well, I just made these green lines here. The market is doing this here, okay? The market is buying the dips. Market is very, very strong when it comes to gold. And the other thing is, and let's see if I can remove all of this. I don't know. I'm not very good at this. But there's an interesting top here. 38.95 is a very interesting level. Because we've tested it this week twice already, and we haven't broken out. And this is all spot, by the way. This is not futures. Futures is a little higher, 39.16 in the futures. And I'm curious what happens once we break this level here, 38.95 roughly. Where will we go? Will spot break out 3,900? Futures is already past that. And when are we going to see 4,000? Your guess is as good as mine. I'm absolutely puzzled by the move in gold. I'm still working on adjusting my mindset. I've said it before. One of my takeaways from the conference season here is that I need to adjust my thinking about also valuations of companies, and that we're just in a very different paradigm. It's a very different time. We're not at 2,000 anymore, and quite honestly, if I look at the chart year to date, like, are we going back to 2,000? No, we're not. We have to get used to this new price level. Like, even here, like, let's put a line here just to make it visible for everybody. But even here, like, even if we come back to this level, which would be, what is it, $3,900, $700, even a 25% drop in gold would bring us back to 3,270. We're not going back to 2,000. What kind of drop would that have to be in gold in a very short time? Let's be realistic. That's what I'm thinking. Just looking at the comments, there's a comment, if the RSI pulls back on gold. Let me just add that to the table as it's a value add here. There we go. Of course, the RSIs are overbought. But I spoke with Gary Wagner a few weeks ago. I think it was Gary who said it, because I'm speaking with him again on Monday night. Things can stay overbought for a long time until they correct. So I'm not sure that's the right indicator. And again, I'm not a technical analyst, and what I'm saying might be absolutely wrong. But I believe, and I'm probably paraphrasing here, that things can stay overbought for a long time. So, and yes, there's a gap, but there are things happening. There's momentum now in this market, and that's really key. Momentum. You should read Michael Oliver. Momentum is really the driver in what we're seeing. That's the important part. Let's take a quick look at silver as well. Same move, same parabolic move, absolutely. Recession fears, I think, in my opinion, have been shelved for now, because all of a sudden silver's moving as well. The shackles have been removed. Silver's catching up. Let's take a look. Gold-silver ratio, roughly, it's coming down, of course. So a really nice trend. I was trying to draw you something here, but yeah, there you go. Hey, nice trend. Look at that, trending down. Fantastic arrow. Look at my shaky mouse arrow there. But gold-silver ratio is coming down. We all know 104, 105 up here. That just wasn't feasible. That didn't make any sense historically even. So we are seeing that correction now. What did I talk about? So we talked about the China's Golden Week. We talked about Mr. Slammy. We talked about Lobo's tweet. Let's come to the company side. We're already talking for 19 minutes. Time is just flying by. We've seen a massive IPO in China. And Deep. Let's share this tab here real quick. Zijin Mining is spinning out Zijin Gold, one of the biggest IPOs in Hong Kong this year. They raised $3.2 billion on the Go Live. On the Go Live, do we call that? The IPO. And the stock has absolutely exploded post. Let me show you the chart. This is the Zijin Gold chart. I love the little dinosaur here, by the way, because it symbolizes this is the very beginning. So Zijin Gold started trading. It opened up at around, where did it open up? 118 or so, and we're at 136. So stock has seen some strong support despite China being in Golden Week. That's really interesting. A really interesting timing, of course, for Zijin Gold to go live. But there's so much demand for gold stocks. We're in an insane price environment. And I'm extremely excited about what's coming next here, by the way. What's coming next are Q3 quarterlies. We're seeing production numbers probably next week. Oh, well, let's get rid of all. How do I get rid of all the scribbles, by the way? How do I get rid of all of them at the same time? Let's see what we can do here. This looks messy, and I'm just not a technical analyst, so I do apologize. Hope I don't delete the chart. There we go. All right, we got him. So let's take a look at the last 6 months, perhaps, and I still have that line in here, but this is August, so we're now... I kind of like this here, actually. So let's... Can I move this here? Oh, we can do this here. So this is... So, gold. Q2 numbers have been absolutely fantastic, and the companies have been producing record cash flows, and the average gold price in Q2 was about $33.50, I believe. Look at this price environment that we were in. We moved massively, starting with Jackson Hole speech by Jerome Powell, August, I believe it was 22nd, and now gold has been moving up higher. We're almost $500 higher in the same quarter. Is the average price? Probably the average price sold first part is probably more around the $3,600 range, but still $250 $300 higher. I'm excited about this because the big producer, or the producers in general, will get $300 extra for every ounce of gold they have produced. This is massive. A 1 million ounce producer makes $300 million in extra free cash flow without having to do anything different. The margins are actually increasing here. There's no cost pressures. Oil still low. And wage increases. Yeah, we've seen some U.S. numbers. The wages have slightly increased, but nothing meaningful. Margins are going to be insane. We have positioned ourselves at KAMAVEST, in the KAMAVEST fund. We've positioned us more towards the bigger producers in our portfolio. We've added to that when we had inflows and positioned those positions bigger in our portfolio. So really excited to have that because that is just a massive move. So, which brings me to Newmont and Barrick. Quickly, I want to discuss these stocks. Let's take a quick look at Newmont monthly chart here. Why am I bringing up Barrick and Newmont? Well, they had massive C-suite changes this week. Mark Bristow was seemingly kicked out. Tom Palmer is retiring. But the funny story is it happened within 5 hours. 5 hours of each other, which, of course, stirred up the rumor mill, and the conspiracy theories started popping up online. I even spread it. Was like, well, are Barrick and Newmont merging now? What does this mean? Let's take a look at just the last 5 days since... So Tom Palmer announces retirement on September 30th. The stock is actually up, but it's a bit of a different picture at Barrick if you look at the last 5 days, because the stock is down with a sudden departure. It wasn't planned. We've only been presented with an interim CEO, and the market doesn't really know what to do with this yet. I personally think this is a buying opportunity. Not financial advice, please. But I think this is a very interesting opportunity for investors. We've seen a massive run-up in Barrick stock. You can see it here. I called it one of the hot stocks in mining. Justifiably so. It has moved tremendously from the what is it? We bought it around here, 28 level, to $47. We almost moved $20, Canadian that is, by the way. In that time, we'll have to see what Barrick does now. They're sitting on a ton of cash. They have some interesting development projects. And of course, the market is waiting for Rico Deke. Is that still going to be moving forward with the new CEO? Is the direction going to change? We'll see. It's an interesting phase. It's good to see a stock move sideways for a little bit as well. We'll get probably a new impulse here shortly when we get the production update that usually comes. Newmont is the first one, I think, next Thursday, and then Barrick right after the following week. So really excited to see the sideways movement because it allows investors to maybe catch their breath and to potentially build up or add to their positions at these price levels. So we'll see what the new management team does at Barrick. I don't think it will be a complete overhaul because so much time and money has been invested in Pakistan. But your guess is as good as mine, because it was a bit of a surprise on Monday to see Mark Bristow leave suddenly. Although rumor from Denver Gold has been that the Elliott the hedge fund Elliott, which is mentioned with Marcelo Kim and others, have been pushing towards Mark Bristow being removed. So we'll see who the successor will be at Barrick. So we talked about Barrick. We talked about Newmont. As I mentioned, Gary Wagner will be joining me tomorrow, Monday for a discussion on SOAR financially. So make sure to subscribe to our channel and bookmark that. And yeah, there is still room to run. There is room to run, in my opinion. We're in a new paradigm here, Tri Legend. I think we're in a completely new environment. I'm excited to see some stocks actually taking a breather, because that allows them to run yet again. It is good to see that consolidation happening. I don't want a straight line up. Of course, when I hold the stock, you do want to see that, but it doesn't make any sense. Long term, this is way better. I like seeing that. And we will see one thing as well, and I mentioned we have to change our mindset. Analysts need to change their mindsets. I still see studies coming out with $2,500, $2,600 gold prices as consensus prices. Like, what is consensus at $2,500? I think we need to change our thinking. The analysts need to up their price targets for gold in general. Don't be so conservative. Conservative is even the wrong word. I think they're actually wrong, just flat out wrong. We're not going to see $2,500 gold in 2 years. Sorry, not going to happen. We're at a new level. We're at a new paradigm. And they need to update their forecast. That will change the cash flow valuation. That will change the price to net asset value valuations tremendously. So I think there's still lots of room to run in the miners. And that's a good point here. Just going through your comments. Really appreciate you chipping in here. I'm just trying to read through them while I'm running through my points that I do want to make. And really appreciate you guys conversing here in the comment section. Much appreciated. I hope I can. He probably wanted to retire. Yeah, maybe. I was joking that at $3,800 gold, maybe they both had stop limits in their contracts. Like, hey, I'm retiring at $3,800 gold, probably selling all his options, shares, and RSUs and whatnot. So, yeah, that's a fun comment. It makes a lot of sense. Then talked about my Q3 gold price expectation. I brought you one more stock that we need to talk about. It is the discovery of the week, maybe the discovery of the month, and it is. I had it up here. Let me just scroll up so you can see the headline as well. And let me switch to this tab. It's Prospector Metals. It's, of course, it was the discussion within the junior mining realm. It was a massive discovery. Hold 2531 intersects 13.8 grams of gold, 1.84% copper over 44 meters. That is a massive interval of high-grade mineralization. The core looks absolutely stunning. There's some photos here in the press release. Let me see if I can find them real quick. Look at this gorgeous core. You can see the mineralization right here. There, it's absolutely beautiful. But the stock has moved tremendously as well. Let me show you the chart. It's like, I don't own it. I don't have any dealings with the stock, but it's absolutely gorgeous. It's great to see the market rewarding such discoveries. And what was even better and a bit surprising, there were no rumors. There was nothing leaked. It was awesome to see that the stock was able to run off that discovery right when it happened, and there has been some follow-up buying, and it seems the stock has reached a new level. So that's the discovery of the week. Will it last? Will it hold? Well, we'll have to see. There was one chart I want to show. There's a cross-section in here in this press release because we're waiting for one more hole. Where we're waiting for 2031. I think we're waiting for 3132. And the company's been hitting some visible gold. Oh, that's the chart I wanted to show you. Not the chart, the cross-section I wanted to show you of that drill hole. There's still assays pending for the hole just above it. We'll see, of course, if it's going to hit the same interval. Personally, I'm expecting a little bit lower grade, but let's see if this can be confirmed, and then you'll probably see another breakout if that happens. I'm not sure they provided any timeline on when that is. Like, I forgot to look that up, to be honest, but that is the highlight of the week, quite honestly. Prospector Metals, fantastic group that is behind it. It's the same group behind it that brought you Great Bear Resources, which was a massive success during a very dire times in the market, and yeah, exciting. Exciting. I was at a conference this week, and that was all everybody talked about. And it's great to see those discoveries being rewarded. Let's hope it lasts. Let's hope it grows in size. Still a bit small, but a fantastic result. So, John Doe, yeah, of course, we're all gold experts. Absolutely. I've been doing this for 15 years. Appreciate you joining us. Not claiming to be a gold analyst, though. I'm not a technical analyst. But it's fun to watch. We discuss this here on the channel on a daily basis. So I'm claiming not to be an expert, but definitely a strong market participant. Appreciate the comment there, John Doe. John Doe, I hope Jane Doe is doing all right. And let's see if there are any other comments. I think we're in the comments section now. Now is the time to remind you about DEUTSCHE GOLDMESSE happening November 14th and 15th. Did you know that Rick Rule is joining us? Alex Kreiner, Keith Neumeyer, Marcus Busla, many others. Did you know? Let me share this with you. I'm quite excited about this. Means a lot to me because it's a rock star panel. Marcus Busla, Germany's #1 newsletter writer and journalist. John Forward, phenomenal exploration geologist and fund manager. Rick Rule, Alex Kreiner, David Finch, phenomenal fund manager out of Paris as well. Have you signed up yet? Make sure to do that. Let's see if we got any more questions before I come to my last part. You are cool, sir. Appreciate it. Thank you so much. Might as well have a little bit of fun, right? How did the asset get to all-time highs? Was it parabolic? Was it a grind? That's why charts never lie. Well, there was a 14-year bear market. I think that we can call that a grind because I used to have actually it's not that bad today actually. There's a bit of gray hair here and a bit of gray hair here. My kids keep joking about it, but at 41, I think I'm okay. I'm doing all right. But it was a grind. And then all of a sudden, of course, it's parabolic. Andy Schectman used to say little by little by little and then all at once. And I think they all at once happened the last 2.5 months. And there's no stopping this train. So much momentum. And I wouldn't mind a bit of a breather, quite honestly. But hey, I'll play the cards that I'm being dealt, and this is a very nice hand, quite honestly. So let's keep going. Yeah, exactly. Gold was grinding sideways until it went up. Well, gold has been, and especially the mining stocks, have been a huge struggle, and so appreciate that. Last thing. Maybe in my own interest, this is more for the German audience here. I'm not sure how many Germans we have here. Maybe you can raise your hand, put something in the comments so I know. But I'm going to mention it anyway. We just issued our latest newsletter, and it is in German. But I've seen certain PDF translators doing a fantastic job. We've uploaded our PDF newsletter just when was it? Thursday. So, and we discuss markets and also our portfolio positions, but also where you can meet me in the coming months. I'm doing a side visit trip to Australia. Probably won't be publishing any interviews during that time. It'll be very difficult during the travel. I'll be attending a conference down in Sydney. I'll be in New Orleans. If you're from the area, if you're joining Brian London's conference, make sure to sign up for that. Fantastic conference, brilliant keynote speakers. Really looking forward to interviewing a lot of the guests that we have on SOAR Financially in person, which is always fun. And then, of course, we have our own conference, DEUTSCHE GOLDMESSE, here at the end of mid-November. So quick update. You can actually also see all our portfolio positions in the fund. What did we sell? What did we buy? We're trying to be very transparent. So make sure to sign up for that newsletter. Of course, it's free, so don't have to mention that. This is the end of the live video that we had planned. Really appreciate everybody coming on. A bit of a weekly market wrap-up. I hope you appreciate this. Leave a comment. Leave something in the chat. What should we discuss next? What should we be talking about? Hope this is useful. Always a bit strange to talk into the void. I'm just looking at my teleprompter here, and all I see is myself. But it's always strange. But I appreciate all the feedback. Hope you're a subscriber. Hit that like button. Thank you so much for tuning in. We'll be back with lots more on SOAR Financially. Much appreciate you out there. Thank you.